Every minute your cash sits in the bank, opportunities are passing by. It's time to seize them. In this video, we are going to talk about 5 assets that are better and safer than cash. So don't keep your cash in the bank and take control of your financial future. Number 5. Industrial commodities and raw materials. In the world of investing, there's a category that often goes unnoticed yet plays a crucial role in our daily lives: industrial commodities and raw materials. These are the building blocks of everything around us, from the houses we live in to the cars we drive. They include metals, energy, and agricultural products, all of which have an intrinsic value due to their physical properties and utility. These commodities are more than just physical goods. They're an investment in the global economy's engine. Their prices are driven by supply and demand dynamics, making them a real asset class that can offer benefits beyond stocks and bonds. For instance, when economic growth is strong, demand for these materials can rise, potentially increasing their prices and the value of your investment. But there's another layer to the story. These commodities can serve as a shield against inflation. When prices rise, the value of cash can fall, but commodities often move in the opposite direction. This is because inflation can lead to higher prices for goods and services, which includes the raw materials needed to produce them. By investing in commodities, you're essentially locking in today's prices for materials that could be more expensive tomorrow. Adding commodities to your investment portfolio can also help spread risk. Since their prices don't always move in sync with the stock market, they can provide balance. When one part of your portfolio is down, another might be up, smoothing out the bumps along your financial journey. Industrial commodities and raw materials are not just the foundation of the economy. They can also be the bedrock of a diversified investment strategy, offering both protection against inflation and the potential for growth. Number 4. Government and municipal bonds. When it comes to investing, stability is key, and that's where bonds come into play. Bonds are like a promised note from the government. You lend them money, and they promise to pay you back with interest. Now, not all bonds are created equal. The ones issued by government entities, known as government and municipal bonds, are considered some of the safest investments out there. Why? Because they're backed by the government's power to tax its citizens, ensuring that there's a very low risk of default. But there's more to these bonds than just safety. They come with a sweetener: tax advantages. The interest you earn on these bonds is often exempt from federal income tax, and if you're investing in bonds issued by your home state, you might not have to pay state or local taxes either. This makes them particularly attractive if you're in a higher tax bracket looking to reduce your taxable income. And let's talk about the interest payments. They're like clockwork, usually paid out twice a year, giving you a predictable income stream. These payments are fixed, meaning they stay the same throughout the life of the bond, providing you with a steady and reliable return on your investment. Government and municipal bonds offer a triple advantage: the security of being backed by government entities, tax benefits that can help you keep more of what you earn, and regular interest payments that provide a stable income. It's an investment that lets you sleep well at night, knowing your money is working for you in a safe and efficient way. Number 3. Real estate investments. Let's turn our attention to a solid foundation for your wealth: real estate. This isn't just about buying land or buildings. It's about securing a slice of the future. With real estate, you're not just purchasing property. You're investing in something you can touch and feel, something that has the potential to grow in value over time. It's an asset that often appreciates, meaning its worth can increase, giving you the chance to sell it for more than you paid. But the benefits don't stop at potential price increases. Real estate can also be a source of ongoing income. If you rent out a property, you receive rental income, which can provide a steady cash flow. This income can help cover the mortgage, taxes, and maintenance costs, and potentially leave something extra for your pocket. Moreover, real estate can be a key player in diversifying your investment portfolio. By spreading your investments across different types of assets, you reduce the risk of being affected by downturns in any single market. Real estate often moves independently of stocks and bonds, so when the stock market dips, your real estate investment might still hold its ground or even increase in value. And let's not forget the long-term growth potential. Real estate investments are not just for the short sprint. They're a marathon. Over time, well-chosen properties have the potential to contribute to building substantial wealth, whether it's through gradual appreciation, redevelopment, or by riding the wave of a booming location. The right real estate investment can be a cornerstone of your financial success. Number 2, precious metals. For centuries, precious metals like gold, silver, and platinum have been coveted not just for their beauty, but for their ability to stand the test of time. These metals have been used as a form of currency, jewelry, and investment, and they continue to be a safe haven in times of economic uncertainty. Gold, for instance, has been a symbol of wealth and prosperity throughout human history. It's known for its ability to hold value over long periods, making it a popular choice for those looking to protect their wealth from inflation and currency devaluation. While gold doesn't always move in line with short-term inflation spikes, it has maintained its purchasing power over the long haul. Silver, while more volatile, has its own set of advantages. It's more affordable than gold, which makes it accessible to a broader range of investors. Silver has industrial uses that can drive its value independently of economic trends, and like gold, it has historically served as a store of value. Platinum, though less famous than gold and silver, has unique properties that make it highly valuable. It's rarer than the other two metals and has significant industrial applications, particularly in the automotive industry. Its price can be more volatile, but it also has periods of exceptional performance as an asset. Together, these metals form a trio of traditional wealth preservation. They offer a way to diversify investments and protect against the erosion of wealth due to inflation or the weakening of paper currencies. Their historical performance has shown that while they may not always outperform other assets in the short term, they have a solid track record of maintaining value over the centuries. Number 1. Certificates of deposit. Imagine you have a sum of money that you won't need to use right away. Instead of letting it sit in a regular savings account, earning minimal interest, you could put it into a certificate of deposit, commonly known as a CD. This financial tool is like giving your money a job with one task: to grow safely over time. When you choose a CD, you agree to leave your money with the bank for a fixed period. This could be a few months or several years, and in return, the bank offers you a higher interest rate than what you typically get from a savings account. The beauty of a CD is its predictability. You know exactly how much interest you'll earn by the end of the term. This makes CDs an excellent option for planning your financial goals, whether you're saving for a down payment on a house or preparing for a future expense. Another significant advantage of CDs is the security they offer. They are FDIC insured, which means your investment is protected up to $250,000. This insurance is a safety net that ensures even if the bank faces financial difficulties, your money is safe. In essence, CDs are a commitment. You're making a deal with the bank to keep your money untouched for a set time, and in exchange, they reward you with higher interest rates. It's a win-win situation where your money is not just secure, it's also working hard for you. So if you're looking for a safe place to park your funds and are comfortable with not accessing them for a while, CDs could be a smart choice to consider. And there you have it, folks, 5 assets that could potentially outshine the safety of keeping cash in the bank. Your financial growth is important, so let's keep the conversation going. Comment your thoughts below, hit like if you've gained value today, and subscribe to stay updated on investing smarter.